following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Be faithful to that which exists nowhere but in yourself. Market-wise, let's take a look at it out here. We have the Dow Industrials up 64. Nasdaq's down 32. S&P's are flat. Gold contract up $4.10, traded at $1,247 an ounce. Silver up 13 cents, $17.24 an ounce. Platinum up 11 bucks at $1,024 an ounce. Copper down a penny at $2.22 a pound. Light sweet crude volatility, oh baby. Light sweet crude's up $1.21 at $45.24. The notes are up 17 ticks, 129.23. The bonds are up 1 full point, 7 ticks, 162.14. King dollar down 113 ticks, trading at 94.42. The euro is up 18, trading at $1.13, and the yen is up 9 at $1.11. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We get over and we go to the cash. What you're going to see is this. So, Yellen, the Fed came out. They took the worry out about the world economic picture. Bottom line, they let an opening that they may go up on rates in June. Bottom line, folks, my take, they're not going up on rates. What does it do to the market? Throws the market nice volatility. S&Ps, right now you're trading at 20.92 in the S&P, the cash S&P. You got the SPY up 51 million. The 51 million's coming into 99 million. No juice here, folks. You're at 209.48. We'll see whether it closes at the 209.48 or, in fact, it fails at 209.29. 209.29 is the number to look at. 209.39. So 209.39 is the lows of the highs. And, we'll see how that shakes out as we come into this close. It would need 30 million shares in an hour. And it can do 30 million an hour, by the way. NDX 100. Well, we take a look at the NDX 100. That gapped lower with the Apple not making their numbers. Bottom line, you have 23 million shares. You gapped lower. NDX 100 wants lower price. Now, what's going to be really cool is you have Facebook coming out after the close out here. Now, Facebook, right now is trading down 78 cents. You're at $107.98. Or 27 million shares. You're going into a swing that had 88 million. That being said, this looks to me that Facebook is going to try to get into about 102. We're at 108 right now. And this is what you have. When we came down February 2nd, Facebook's at 117. 5 days later, it's at $96. Monster volume down there. It's having a hard time holding price at this particular level. So, bottom line, I suspect Facebook is going to make a fortune. There's no two ways about that. But guess what? Whatever it is, it looks like to me it's going to trade at about the 102 level. Tomorrow, Amazon. What are we going to have with Amazon? Amazon comes out with the numbers after the close tomorrow. What do we have with Amazon? Amazon also has an expansion with volume. We're at 3 million shares right now. Yesterday you did 2 million. You're coming into 2.6 million. Amazon is also setting up to trade down somewhere into the 656 area. And right now Amazon is trading at 606. Gold contract. What do we have with gold? Bottom line, as the Fed continues to not go up on rates, that is going to continue putting power inside the whole commodity sector. We have a gold right now, the gold contract. We've done 164,000 contracts. Last Thursday we did 273,000 contracts. The high there is 1272. That's what this thing is going for. 1272 is game, as well as 1287. Some of the actually gold and silver equities they just continue to go higher. Notes. Let's go over to the notes. Okay, so check this out. This is pretty cool. The notes, folks, the 10-year note, it's up 16 ticks. We have 1 million contracts traded. These notes look to me like they're going to go down again, which the market itself, as they go down, will generate higher yield. Why? Because the 10-year right now, it's at 129.22. We went to 129.26 today. Well, we'll see where this closes out, but the 129.14 level, that's what it's come. No, actually, it's 129.22. Right where we are, 129.22 is the low of the 20th. We did 1.29 million contracts there. We've done 1 million contracts. So, we'll see if it can handle that price. But it looks to me like that's going to be a rejection of price. You're going to have lighter volume as it went up. The thing will flip around. It's going to go right after that swing low again of 128.01. King dollar. What do we have with King dollar? Let's go take a look at King dollar. King dollar out here. And of course, at 2 o'clock, these markets, they flipped all over the place. And you can, I expect as we come into the close, guess what? There's going to be more selling pressure as we come into this close. King dollar, DXM6. What do you have with King dollar? Okay, so King dollar right now is down 53 ticks. You've done 25,000 contracts. King dollar is building cause in order to come down into this 93.62 area. We'll see whether it can break it on the way down. But what we definitely had here is that it rejected getting past the $94.67. We went into that downdraft, downdraft going all the way back from March 17th at 30,000 contracts. We've done 25 out here. This is setting up lower prices coming at us. Our phone number is 877-927-6648. Let's take a look at the silver contract. What do we have at silver? Silver out here is trading at a price point of $17.19. You've done 74,000 contracts. That has the buyers. That has the price spread. That has all the above. Silver wants to run up into this area of 1772. And it looks to me like the silver contract doesn't even want to hang around at the $17 area. That's the bottom line. Silver looks like it's going to get rid of the $17 area, run right into the 1852 swing high that's been out there for quite a while. Some of the high volume stocks, let's go take a look at some of the higher volume stocks out here today. You have Apple's the move. Apple's down 667. You have Marathon Oil up 37 cents. Advanced Micro's up 7. Our phone number is 877-927-6648. Stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now is up 88. You get the NASDAQ down 23. S&Ps are up 4. If we take a look at these indices out here, this is what you have, folks. So the Dow's up 0.4%. The S&P's up 0.1. NASDAQ is down 0.5. We go over to the biotechs. We take a look at the biotechs. The IBB is rejecting lower price. The IBB is down $2.33 right now. 1.3 million shares traded. That baby's coming into 5.9. So the battle is on here in a big way. ExxonMobil. So Exxon's putting some juice into the S&P right now. Exxon's up $1.07. It has light volume, but bottom line is up $1.07. They came out with their, let's see, did they come out with the numbers yet? In the middle of the day, what they did is that they boosted their quarter dividend to 75 cents a share from 73. Let me see when they're coming out with numbers. They're coming out with numbers the 29th. Chevron. Well, let's go to the XLE first. We take a look at the XLE. So the XLE right now is trading up $1.28. You have 17 million shares traded. We are at $68.61. And that November 3rd level out there, it looks like they're going to try to hit it. That November 3rd level, the low of that level is $70.80. The XLF, let's go into the XLF. The financials are up 8 cents right now, trading 38 million shares. And that's going to need a lot more than that. Bottom line, the XLF, we're at 23.73. You're coming into, monster volume. 75 million shares we're coming into out here. So that is a big, big number to come into. We go back into the E-minis. So the S&P itself, right now the E-minis are up 450. The spread inside these right here today go like this. We are at the highs of the day. You're at 2093, and this one's going to be a crucial one right here, and this is why. So picture this. Let me bring this back 5 days, because you just took out, okay, so this is what we did. We just took out all the highs that were generated from from the last 5 days. You get over a high, bottom line, you better stay over that high. So the number you're going to be watching here is 2089. Bottom line, you're over the 2089 right now. If we don't come back inside that 2089 before the close, that will put game on up to that 2103 number. Intraday, we bring this in a little bit closer, and what you're going to see is this, is that we are set right there, 2088. Intraday, coming into this close, this is going back to 2088. Where 2088 is, folks, that was at the 2 o'clock hour. That's where we had the volume come in, 86,000 contracts up there. Since that point, you have lighter and lighter contracts as you get up into that level. So this is going to be a battle going into the close. The NQs, we take a look at the NASDAQ futures, the NQs out here have done quite a bounce, man. The NQs, the low of the NQs today was 43.73. You're at 44.16 right now. That is coming right off the close from this morning. You know, we this morning at 9:40, you bumped up to 44.18. Bottom line, it gave it up in spades, goes down to 43.79. You know, and we'll see where the rest of that, because that is still a gap down. That gap down, of course, was from the just Apple. Inside the NDX 100, this is what you have, the strength versus the weakness. Strength inside the NDX, Akamai, that is up 3.5%, or $1.90. eBay's up 3.1%, or 81 cents. Mondelez is up 3.2%, or $1.36. And Western Digital is up 3.2% at $1.41. Taken away from it, good old Apple is down 6%, or $6.51. Regeneron is down 3.6, or $14. You have Electronic Arts down 2.7%, or $1.86. Volume-wise out here, what you're going to have is this. Inside the NYSE, it looks like it's going to be short volume. Okay, it was 800 million. What time we got? No, there's going to be volume, man. Okay, so we're at 697 million on NYSE. That's saying it's going to do 9,950. NASDAQ Composite, big volume. NASDAQ Composite, we're already at 1.5 billion. That is going to lay out about 1.95 billion. And what that is market that is going south with an expansion of volume, you know, with a nice bounce back, by the way, okay? But bottom line is that is an expansion of volume as you're coming down. And if we go take a look at the 3Qs, what you're going to see, 3Qs today, I've done 24 million shares thus far. We're at $107.71. Bottom line, it wants lower price. And of course, I don't know what time Facebook is coming out with numbers. That doesn't have it here. But they're going to be out with numbers after the close, and of course that's going to be the fireworks after the close. Let's go to Nabel in Atlanta. Hey, Nabel, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Awesome.
Yeah, that British Petroleum worked out for you. It's a beautiful thing, man.
Yes, absolutely.
What are we going to look at?
Twitter.
So what are we doing with Twitter?
Looking for an entry point. I don't own it right now. Just.
Thank God. I'll give you an entry point. Zero. I'm only kidding. Let's look at it. So you got Twitter, folks. Okay, Twitter's down $2.80 today, $14.95. Let's see what we have. Oh, that's an ABC down. Okay, 1 second. So you got. Wow, what a disaster this is. Okay, so let me get this. So Twitter, I'm going to put this on a weekly. Yeah, you're not going to want to buy this. Okay, so Twitter's been on a one-way streak, folks. It was $74 in 2013. It's coming into $13.91, and it has volume. So the A point is 31. Your B is 14. So you got 14 bucks. Your C is 20. $6. Don't even think about it, man. Don't even think.
Okay.
This is going to be a disaster, folks. This is a trip. Watch it. Now, it hasn't broken the B point yet, but guess what? The way this is building cars, this thing is barreling into this B point, and it already has more. Okay, it's done 74 million shares today. Where it's at the 27th. It only needs 167. It only needs 30 more million shares, and that'd be more volume than it has at the swing. So that brings the probability higher that it's going to do an ABC structure on the way down. So. Okay, man. Have a great one. Have a safe one.
Thank you.
You're welcome. And so check this out, folks. That's the technical setup. But if you're a fundamentalist, at this price here, even at this price, listen to this. This is sick. You're paying $28 for every dollar that it makes. That's insane. And they're not growing, okay? So that's a problem. That's a big problem child, no doubt about it. Dow right now, let's go see what's the strength in the Dow. So the Dow's up 84 bucks. We're at 18,073. You're coming into, this is pretty cool. Okay, so let's see so we're coming into the last high that was generated out here. The low of the high is 18,031. If we go look at the diamonds, we get 3 million versus 2.7 versus 2.6. That's going to get interesting, man. You stay right there, folks. We're going to be coming right back. Dow right now is up 81. Nasdaq's down 21. S&Ps are up 350. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 79. Nasdaq's down 21. S&Ps are up 4.5. CMG, okay, so this little baby continues to get slammed. This is down 26 bucks today. You're trading at $419. Now, what you're going to see here is this. This is going to be pretty intense because this is another equity that very well could be doing a very large ABC structure on the way down. What we're doing is this. This equity has had, let's see, let's do this on a weekly. So on a weekly basis, their problem started in October of 2015. Stocks at 750 bucks. Straight down, has a high volume swing low at 399. that's about as intense as you can get. Now check this out though. You go from 399, you do a counter trend bounce that goes from 399 in January of this year, and you get up to January 2015. No, January this year. Yeah, it's January this year, 2016. So you go from 399, you get a counter bounce, and you get up to 541. Now, at 541 on a weekly, what you had is that you had 6 million shares. 6 million folks, okay, was going into 14 million. So not even close, okay? Can't handle it. Then what ends up happening? You come off that high. Now what you're doing is that you're setting up to go after the high volume swing low, which is 399, and we'll see whether it breaks it with volume. If it breaks it with volume, it's going to be a disaster because the 8-point on this is 757, and your B is 400. So you're talking about 257 A to B, and 541, 257, 4, my God, 3, 8. You're talking about 284, and we're at 419 right now. Let's go to Dan in Clearwater. Hey, Dan, what's going on?
Hey, Tom, it's going well.
That's a beautiful thing, man.
Lot of volatility.
Yeah, no doubt, man. No doubt.
Yeah, I have a question for you regarding Royal Caribbean, RCL.
Okay.
I went short this on Friday, and I was looking at it as a larger ABC down structure, and I just want to get your feel for it because it has popped up the last 3 days. So.
Let's take a look. You got Royal Caribbean. The low for the year is $64. The high is 103. Okay, so I can see. Okay, so you were looking at a large ABC down, right?
Right.
Okay,
right.
cool. Okay, so what he's looking at is that the 103, folks, going back to December, it went from 103, comes down to 64. Does a counter trend bounce up to 84. Okay. Okay, so let me put this on a weekly now. Yeah, this is just a counter trend bounce, man. You know,
okay.
You're going after what you have here, folks, is this. So picture, let's see, with today Wednesday, right? Yeah.
Wednesday. Yeah.
So 7.2 million is going into 15 right now, so that's not bad, meaning that you're still going up with lighter volume. The real kicker is going to be like, where do you have your stop right now?
I'm actually in with puts.
Oh, okay. And
June.
how far out are you?
June.
June. So you're going to give...
and I'm thinking it's not far enough out based on what I'm...
21 to... So you get 23 days. No, you get there's 21 trading days in a month. You get option expiration, I think, is this week, right? And then, so you get next option expiration. And what strike price you got?
What strike price am I sitting at here? June $60. $60 strike price.
Oh, that's a problem. Okay, I see. Okay, you didn't pay much for those, right? Penny, nickel?
No.
Would you pay a nickel, right? Something?
A little more than that.
Okay. So what happens here? They're not worth anything right now, are they?
No, actually, I'm down right now.
Yeah, I mean they're way out of the money, man. To get that, that's pretty intense.
Yeah.
I mean, even with the B point is only $64. You know, I understand what you're saying. You're trying to break a large ABC structure on the way down, but
right.
Yeah.
I mean, I think if it pulls back any at all, I'll be at least back to a break even. But I guess my term was too short on this.
Yeah, and that's really far out of the money too, man. Do you know what I mean?
Yeah.
You know, so you need some monster movement to make some bread on that.
Right.
Okay, man. Have a great one, man. Have a safe one. And folks, if you like trading options or you trade options, right, every day right here, 12 to 1 Eastern Standard Time, swim lessons. They do an amazing program. Check it out. okay? And if you're listening in your car right now, remember that you can get us 24 hours a day right on your cell phone. Just go to TFNN.com, hit Tiger TV, okay? Because there's other ways that you can set that trade up and have defined risk and bring the probabilities into your favor a lot better than going out of the money so far. That's just how the option market works. Let's go take a look at the XAU, the HUI. So this is going to get interesting in the gold miners in the next few days. And the reason being is this. XAU right now, which is the weaker one of the gold miners, the XAU, the HUI, we're right at the top of the whole range here, man. The highs of the XAU, the close of the high was $81.52. Well, we're going to have a closing high today. Unless this whole thing sells off in the next half hour. But bottom line, you're not going to have a closing high, but it looks to me like, man, that thing's going to go after it, and we'll see whether it can take it apart, meaning the $85.27. The Gold Bugs Index, we take a look at the Gold Bugs Index. Would you have the Gold Bugs Index? Right now, you're at $207.32. This also, I suspect, is going to be a closing high. Let me see. 207. Yeah, right now it is. If we close right where we are, this is going to be a closing high. And what's going to be cool here is this. What you're doing is that you're pushing into these highs and you have volume. Okay, so when you're pushing a swing point, if you're pushing it on a lower swing point with volume, guess what? That's where you're going. You're pushing a higher swing point with volume, that's where you're going. The gold and silver stocks right now are pushing their high swing points with an expansion of volume, and we're only in Wednesday, which is really a really sweet indication that we have Thursday and Friday to get some traction going. And it's going to be, what does happen with these Fed meetings is this, folks, is that the following day, and that'll be tomorrow, you can expect we're still going to have volatility, because it seems that there's always a lag of about a day as to, okay, how much volatility is in the market, number one, and where's it going? That, together with Facebook earnings after the close today and Amazon tomorrow. Good number. Good numbers all around. Let's go take a look at Google, and we see what kind of action we get in Google out here today. Google right now is flat. Google has been as low as $692. Right now it's at $707. You stay right there, folks, and we're coming right back, and you can expect some more volatility as we come into this close. Dow Industrials are up 86. Nasdaq's down 17. S&Ps are up 5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is up 75. Nasdaq's down 20. S&Ps are up 3.5. Let's go over to the oil contract. You know, you talk about some volatility out here today. This is about as cool as you can get, folks. CLM6. Okay, so oil comes out with their numbers this morning. Oil's trading up was trading up about 50, 60 cents. We were trading at the price point of $45.04 right before 10:30 this morning. Comes out with its oil numbers. Oil goes from $45 straight down to $43.77. Rejects lower price at that level, and you're going to see your first get-go down, folks. Okay, at the 10:30 level, we had 22,000 contracts. Okay, so it comes down with 22,000 contracts. Has some real juice. That low there was $43.94. The next leg down, guess what? Boom. Only 16,000 contracts. Rejected lower price. Goes topside again. Over the highs. Now, that's on the daily. On the intraday, rather. Now, watch the daily, because this is pretty cool. So, on the daily, what we have is you have 618,000 contracts traded. The swing point that we're dealing with is $44.26. Now, the oil contract has just finished a small ABC structure on the way up. That's the way this thing looks to me. Your A point on this is $36.57. That was the low that was established on April 5th. So $36.57. Your B is $43.69. So you're dealing with $5. Your C point is 39. So that gives you a $44 A to B equals C to D. What's cool about that is that inside this volatility at this level, and then you're going to go over and say, okay, where are you coming into? And we're coming right into ICE. ICE is laid out there at $44.83 from December 7th. That would be the bottom of it. The top of it is $46.68. So we'll see whether it can make it up into and over that area. But at this particular point, bottom line, I think you're going to run into some resistance there. The volatility is there, and the snapback is there, no doubt, which is pretty cool. Because when you get a snapback that is that fast and furious, what normally also happens out there is that's all that is a snapback, and you're going to be right back down on the other side. You know, King Dollar will have a difference in that, though. There's no doubt about that. And you know, where King Dollar goes, a lot of these commodities are going to go. Meaning King Dollar keeps getting weaker. If we go over and we take a look at some of the commodities out here right now today, this is what we have. The crude oil market is up 2.8%. You have heating oil up 3.3%. Gasoline is up 0.8%. Cotton is up 0.5%. Silver's up 0.4%. Gold's up 0.1%. Taken away from it. Excuse me, folks. You have coffee down 3 3/8%. Sugar's off 1 1/3. Wheat's off 0.8. You get cocoa down 0.6. Natural gas. Tomorrow morning, natural gas numbers are going to be coming out. That's always fun looking at the natural gas numbers. Natural gas right now is trading at $2.14. You've done a sideways move out here today. It looks to me And we'll see how the setup lays out. But I'd like to see natural gas come down to somewhere about the 202 level tomorrow morning. Because if you got 202, you very well may have a little consolidation with 202 is your bottom. Oh, sorry, folks. Excuse me. 202 is your bottom, and 230 would be your high. You know, that's how that would be laying out there. 877-927-6648. Let's go back over to Facebook, see what they're doing with Facebook on the way in, because the bets are going to be out here. There's no doubt, folks. So Facebook had a low out here today of 106.31. You're at 108.57. It's just about a flat market right now, and you get a rejection of lower price. So what Facebook has done is this. Facebook went into the swing point from the 13th of April. The low of that swing point is $106.52. We had volume there of 88 million. It goes to 106.31. It rejects that price, has lighter volume. That's on your daily. We take this and we put this on the weekly, because this is going to be a tough one, man. This is a tough one flat out, how this is shaking out. You put this on the weekly, and you can make the case that you have a high volume high at $117.59. That was the week of February 5th, so $117.59. And you never tested. You got to $116.99. So this is going to be great watching this shake out. My take here is that we are still going down into the 105.11. And where I'm going with that is this, folks, is that there's no doubt that you get that high volume spike from the 13th. What you also have, though, and this is how a lot of these have been set up, is that you have on February 2nd, we're at $117. This went straight down, just like Google did, just like these other high-tech great stocks did. And they went after these lows at 102 to 106. So that's saying to me, guess what? That's where it wants to go. So this is going to be really cool. I love earnings numbers. It's not just the earnings numbers. the earnings and how they can push equities around, particularly when we're at highs and or at lows. That's what happens is this: if you have really high highs or really low lows, that's when you get action that basically exceeds most every quarter. You know, so and that's what we have happening right now today. And we're going to know what's so cool about it, of course, is that you're going to know right away. Now, what I'm also taking into consideration is where Amazon is and what Amazon is doing. What Amazon is doing is also getting into a low with some juice behind it and an expansion of volume. Amazon's down 850. We're at 608. It has 3.4 million, which is an expansion of volume. And Amazon also is laying out here. Let me put this. So Amazon, the weekly last week, went up on 18 million, going into 33. That's not an indication it wants higher price. That's an indication that you have distribution, you know, up at these levels of $630. On the way, the first place that it looks like it has any type of support would be $581. You know, so the way that is laying out, that's how it looks like it's laying out to me. And we're going to find out real quick. There's no two ways about that. Let's go over to look at ExxonMobil again, because Exxon is the juice right inside that S&P. Exxon right now trading up 95 cents, $88.59. And this little baby, these, you know, we'll see whether they can handle that November 3rd high, which is $87.43 is crucial. See, the last time we were up here, we had 20 million shares traded. Right now, you're at 8.6. So I'd want to see a failure of that price first before you flip the switch on the other side. But bottom line is that you can see there's no one in the store. They're buying the product, and that is an indication that Exxon wants to go south. We already pulled the switch on another oil stock about 11 o'clock this morning. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So we get the Dow up 63 right now, Nasdaq's down 23, S&Ps are up 2. We have gold trading up 350, silver's up 11 cents. Silver has a nice bump up, has the volume, hanging at the highs up here. As we come into Thursday and Friday, folks, I expect we're going to get a lot more action inside the XAU, the HUI, all of the above. As we come into the close out here, right now it's going to get intriguing because you can see that the battle is on for the next 4 to 5 minutes. So it's going to be pretty cool watching this baby shake out, and particularly because we got plenty of numbers after the close. The dollar down 93 ticks. That's no big deal there. Bottom line, we do have volume, though, as we're pushing into lower price. Let's go take a look at the... I haven't looked at Walmart in a long time. Let me see what we got with Walmart. So Walmart's laying at highs, $69.46. We put this on a weekly. Oh, this is a wicked dead cat bounce. So check this out. This is pretty cool. So Walmart came off a high of $90.97 January of 2015. Goes a one-way route, goes down to $56, and it's coming right up to ice. This is pretty intense, actually. So what you have is this. The top of ice for Walmart is $72.23. When do they come out with their numbers? And this has zero volume, by the way, as it's trying to push into this price. May 17th. So that's got quite a while before it's going to come out. But that's something you want to watch because what you do have there is that's saying that just in general that these companies are basically topped out, So we go over and we take a look at the how we're coming into this closeout here. The Dow, they're hitting something in the Dow. We'll see what they're selling away in the Dow. The Dow just went from we're at 18,045 now. And what will get interesting here is this. So the lows of the high, folks, are 18,031. So if you go under 18,031, this is going to be crazy how this is set up. Let me figure this out. So the 20th MVOL, the 20th of April, you got to take the 20th of April, which is 986 million shares. So watch this. So this is how this shakes out. We're testing the low of the high right now. On the 20th of April, we did 986 million shares. So if we do less than that, and the Dow Industrials close under the, let me get this number again. Come on, baby, get up. Close under 10,031, that'll be down another 20 points. That would be a failure on price and a failure on volume. And it's real subtle. So it's always cool when it gets really subtle. And what I mean by subtle is that it's like, what did it just do? Did it test it? Didn't it test it? What did it do? So, the futures don't close to 415, so you can expect that we're going to get a lot more volatility coming into those futures. Oh, well, they just took apart the NDX again. You gotta love them. So the NDX just went from, there she is. So the NDX, when we just started that segment, that we were up at 44.19, we're at 44.07 right now. And you get some juice behind the move. So right now you got 7 minutes into it. You already got an expansion of volume inside it. And what's game here is 4,400. See, 4,400 is where you got that bounce at 2 o'clock. So, bottom line, that'll be a normal situation. If we go into the E-minis, we had done this earlier in the program. I believe it's 88, isn't it? You're at 2089. I think it's 2088. It's not. Yeah, it's 2088.25. That's that number. Hey, we'll see where it's going. This is Tom O'Brien. This is TFNN. You stay right there. Come right back, folks, because guess what? Facebook's going to be coming out with numbers. We're going to have volatility all over the place. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Follow what you love, and it'll take you where you want to go. Market-wise, let's take a look at it out here. We had the Dow Industrials up 51, NASDAQ down 25, S&P's up $1.50, gold contract up $4.10, traded at $1,247 an ounce. Silver up 13 cents at $17.24 an ounce. Platinum up 11 bucks at $1,025 an ounce. Copper down a penny at $2.25 a pound. Light sweet crude up $1.29 at $45.33 a barrel. Bonds, the 10-year note up 18 ticks, 129.24. 30-year bond up a full point, 4 ticks, 162.11. King dollar down 73 ticks, trading at 94.47. The euro is up 15, trading at $1.13. And the yen is trading, where am I? There she is. Up 22 at 111. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get the cash S&P right now at 2,096. The low of the high is 2,096.32. We go take a look at the SPY. What you're going to have here is this. The SPY, the SPY right now is trading at 209.35. And this is bizarre, folks. So check this out. 209.36. No, 209.39 is the high, the past high we had on the 20th. We did 81 million shares there. Thus far, we have done 72 million. So what you have here is a failure. You have a failure. This is about as wild as it gets. You have a failure on price. You have a failure on volume. The SPY went into 209.81. We're at 209.35, 209.39. It had a 209.39 had to close it. Bottom line, this market still wants lower price. And that's not even the high, by the way, okay? That's not the high of the SPY, but that's saying, guess what? It's subtle, but it can't make it. NDX 100. What do we have at the NDX 100? NDX 100 came off today, had wide price spread, had volume on the way down, did 31 million shares, down 86 cents. That baby not only is down, and it continues to want higher price. Now, that being said, Facebook just come out with numbers. Facebook closed out, there she is. Facebook closed at 108, I believe. It's trading right now at 115. So 108.89 is what Facebook closed at. It's trading at 115 right now. Now, Facebook is about 4.5% of the NDX 100. So that'll put a little juice into it, but it's not enough. If we go into the futures are still trading out here, folks. And what it's done with the futures is this. You have a little pop-up. We got to 44.24, I believe. Right now, you're at 44.22. The NDX still wants lower price. Gold contract. What do we have with the gold contract? Gold contract. We're on this is pretty cool. So we're on a Wednesday. We get Thursday, Friday inside the gold market. You have the Fed came out with their numbers. The bottom line is that they're not raising rates. They were saying that, hey, we'll look at it again in June. They put an opening for June. What that did, of course, is that keeps volatility in the marketplace, keeps it going pretty good, too. So inside the gold contract, what we did out here is this. Gold's at $1,247. We've done 168,000 contracts, which is good contract volume. It's big contract volume. Last Thursday, we did 273,000 contracts. Bottom line, it's going after the swing high from last Thursday. I suspect we're going to be running up into this 1287 area. The notes, what do we got with the notes? What the notes did out here, folks, is this. The notes came into the downdraft. Thus far, we did 1.1 million contracts. Well, that's coming into 1.29, let's say 1.3 million contracts. The bonds are going to need, and the notes are going to need more volume in order to get to higher price, meaning get to that 130 and a half. Right now, you're at 129 and a quarter, rather. King dollar. What do we have with King dollar? What you have with King dollar is this. King dollar out here today traded down 73 ticks. We've done 26,000 contracts. That 26,000 contracts, that's pushing the lower part of this whole range, and you're pushing it with volume. With that saying it, that King dollar is going to make its way down to this $93.62, and we'll see whether, if in fact it's going to break at this time and go after that 92.30 to 92.50 area. Both of those areas, folks, you have the 92.50 area, that's the high volume swing low that was established out here August 24th. The 92.30 area is the ABC structure that we're in on the way down. Silver, what do we have with the silver market? Silver wants higher price. What we have with silver out here is this. Silver is trading at a price point of $17.24. We've done 76,000 contracts. That's big numbers. The high in silver was last Thursday. that we did 142,000 contracts up there. Now, this is the cool thing. Silver is actually at a closing high right now. $17.24. That's where it closed out at. The last high up here, we had gone to $17.72. We closed out at $17. So what you're going to see here is that the XAU, the HUI, both of those also closed at closing highs. The XAU is up $1.37, $83.43. That is the closing high in the XAU. HUI, the Gold Bugs Index. We take a look at the Gold Bugs Index. Gold Bugs Index is at $207.20. That also is a closing high. In fact, the high of the Gold Bugs Index is $211. It had closed that day at $202. Bottom line, you're pushing into that high, and guess what? You're pushing into that high with volume. What does that set up? That sets up the next 2 days. We're going to go after those highs. The real question is, as we go after those highs, is it going to take those highs out with volume? Bottom line, we're going to know soon enough. You go back over to that dollar, the dollar index. Dollar index is weak. The real kicker is going to be here, folks, when the Federal Reserve does come out with numbers like this, meaning what comes out with their statement that they're not going up. The following day, the volatility continues in this marketplace, and you can expect that volatility to continue. Facebook come out with numbers. Facebook closed at 108.89. That's trading at 115.64. You stay right there, folks. We'll be coming back with our man, Mr. Chris Gaffney, the president of Everbank World Markets. We're going to be talking currencies. We're going to be talking commodities. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom, take takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 51, NASDAQ down 25, S&P's up 2.5. And as we do many times when the Fed comes out with a statement or that news conference, we have our man, Mr. Chris Gaffney, the president of EverBank World Markets. And folks, when you come over to our website at TFNN, you're going to see right on the right-hand side, you're going to see the EverBank banner. As you hit that banner, you're going to see what comes up. And then what it is, it's a second chance to grow with a new financial resource. And what this is all about is this. So picture something. The 5-year Treasury right now is at 1.326. I'm not quite sure what a 5-year CD is at. But EverBank has something that's very unique. They're cutting-edge products, and they have been for a long period of time. In this particular case, what we're talking about is that we're talking about the 5-year market-safe commodity CD. So what is it? It's a 5-year CD. It has 8 commodities inside it. Your principal is 100% protected. It's $1,500 to open. That's the minimum. It's FDIC insured. It's IRA eligible. And now Chris is going to walk us through, because the only thing you're giving up inside this is, I believe, what the 5-year CD would get you, and I think it's somewhere about 1.5%, because this CD here can get you up to 70% per year, and then for the whole 5 years of these 8 commodities that Chris and I are going to be talking about. Chris Gaffney, welcome back to TFNN.
Thanks. It's always a pleasure.
I'm telling you, man, it's like Janet Yellen. It seems, in fact, I got a couple emails like this, Chris. It seems like the longer that this gets put off, the harder it's going to be to raise rates.
Oh, you bet. And yeah, I've read through the announcement. We had some interviews, and it's, from what I read, we're going to be lower longer. I mean, rates are not going to go anywhere. She's not in a hurry to raise interest rates. The Fed is going to keep these rates lower longer. And really, now we've got the Bank of Japan up next, and of course they're at a negative interest rate policy,
yes,
along with the ECB. And again, they both are looking to increase that stimulus. So, as you point out, we're going to be in a low interest rate or even negative interest rate environment for a while, which really, makes opportunities in, the opportunity cost of owning a non-interest-bearing asset much cheaper. So it's positive for commodities, positive for the precious metals, and for our market-safe CDs, because the performance is going to be based off of the commodities, and again, your only cost associated with this market-safe CD is really the opportunity cost of the interest that you would be earning in a regular 5-year CD.
I know, it's amazing, and it seems that what happens, folks, is that the Fed can keep saying that, listen, they want to raise rates. But when you look at the world rates, as Chris just went through, Japan on a 10-year, is at 0.5% negative. It's like, you're going to be kidding me. I mean, that's a big number, folks, okay?
That's on the debt. That's crazy.
I know, that's on the 10-year. Never mind the 5-year, okay? If I bring the 5-year up, it's amazing. So let's go through the CD, because this is so cool, folks, understanding, and there's plenty of you folks that, are in the CD market, okay? Well, guess what? You can be in the CD market, and you can get upside potential. So the commodities we're talking about is this, folks. Okay, there's 8 commodities inside here. I believe each one of them is 7.5%? No, 7, 8. No, it'd be more than that. Okay, so there's 8 commodities. We have oil, gold, silver, soybeans, corn, sugar, copper, and nickel.
Right, and each is 12.5% weighting, so they're evenly weighted. And again, we have a mix of both precious metals, some industrial metals, and then the agricultural commodities, and then the big boy of oil. The big commodity of oil. And the investors, our purchasers of this CD, benefit if those commodities rise in price, and you'll get each year it's an averaging. So each year we're going to compare the original price of those commodities to the price at the end of that year, and then pay our record that upside, which is capped at 70%. At the end of the 5-year term, we average all of those interim performances, and that is what you'll receive on the CDs. So again, if there's any positive return, you'll get that up to 70%. If, in fact, commodities fall further from here, if that should happen, you get the return of your principal. And it is FDIC insured, eligible for an IRA, like you said, and a low minimum deposit. The entry deposit is only $1,500. So it's something that you can do in that IRA account, or something that if you want to dip your toes into the commodity markets, which can be pretty volatile, this is a great way to get exposure to that commodity asset class, which is important to have, with no downside risk whatsoever.
There's no doubt. You know, we had a quick question in here, Chris. How does it work with folks that live in the UK? We got a couple of folks that live in the UK, and they're asking, can an overseas resident buy into this?
You can. We may jump through a few more hoops to open an account. So the first thing you have to do is open an account here at Everbank. There's a few more hoops, but absolutely we can open these accounts for non-U.S. citizens. It's
a great deal. So what happens, folks? So check this out. I'm going to just put this up for you for a second, so you can just see a few of these commodities too, folks. Because what's so cool about this, is that you know that I'm prejudiced, folks, because I'm a bull in commodities right now. And I have, I go bullish and bearish, Chris, over the course of years. But my take on commodities right now in general, they've got killed for years. We've had the run. And the bottom line is that whether you look at wheat, whether you look at soybeans, whether you look at corn, these things are off the lows. And, this is... So probability-wise, it's also a nice time to get into it because, again, you go back to the aspect of how much you're going to get, for a normal CD inside a bank. You're not giving up, you're really not giving up. You're just giving up whatever that principal, whatever that interest is that they give you. And I think it's only running about 1.5% anyway, right? So it's
right. And we have some great rates, but even our rates are not that high. There's just not a lot of interest in the markets right now. There's not a lot of interest that's being offered. And again, that's actually a very good environment for commodities. I agree with you. I'm a commodity bull because, that environment is actually really good for, and that's what we saw during the first quarter. You saw the dollar come off a little bit, and commodities were some of the best performing asset classes of any of them.
And every single day, folks, yesterday, Andy and I, Chris, we were going through the population, and it's amazing when you put a population clock up. What happens, folks, is that demand versus supply, guess what? Every single day there's more people, there's more mouths to feed, all of the above. So come over to our website at TFNN. You can hit the banner, or you can give them a call, and they'll be more than happy to take care of you. They have a great center there, their own people taking care of you. Their number is 855-750-4051. That's 855-750-4051. Just ask them about the 5-year Market Safe Commodity Solution CD. Chris, you have a great one, a safe one. Of course, it's always great having you on, and look forward to having you on again.
You bet. Thanks a lot.
Thanks so much, man. Have a great one. Have a safe one. You stay right there, folks, and we'll be coming right back. That number again is 855-750-4051. Coming right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 51, Nasdaq down 25, S&P's up 3, and as we do each and every Wednesday at 1/2 the second hour, we have our man, Mr. John Logan. Now, don't forget, folks, John kicks us off every trading day right here at TFNN, 8 o'clock in the morning. Now, wherever you are in this great country of ours right now, in your car, remember that you can get us right on your cell phone. If you haven't tried it yet, please try it. You're going to love it. You just go to TFNN.com, hit Tiger TV. We got HD quality coming right over your mobile device. Great audio, great video. John has a great piece of software, the TAS Market Profile. You can come over to our website right now, test drive it absolutely free. John Logan, what's going on?
Hey, Tom. Good to be back with you, man.
You too, man. How you doing?
Good.
Yeah.
Man, did you see those notes come off these unfair lows on the weekly?
I did, man. There's no doubt. They come off like a rocket ship.
Man, what's going on that's really interesting here? I was, again, I kind of stayed glued to the scanner. With the Apples and the couple other ones that imploded today, the things that have been leaders, this market's literally held up pretty well, and the breadth has stayed really positive.
On the S&P, you mean?
Yeah.
Right. Now, I heard you this morning, too, and there's no doubt. On the S&P, it has.
Right, yeah, and it's kind of wild how the pack is kind of separating a little bit, and it's kind of a scary time really to get short in a big way. I mean, unless you have a kind of a hedge in place, because we're kind of eerily just kind of creeping up again up into these kind of unfair highs on the weekly and daily, 2095, 2096 on the June futures, and man, you would think that Apple kind of coming off like that would have kind of disturbed people a little bit more, but
it didn't. No,
still feasting on the low rate promises, and the notes going up are again kind of what the market wants to see.
Right, and that's what they got.
Exactly,
right? That's what they got. There's no doubt about that.
And you knew they weren't going to say anything otherwise. So,
Well, and it seems, when I was just interviewing Chris Gaffney, the president of World Markets at Everbank, and it really seems, I want to thank our man Jeff up in New York. He sent me an email a little bit earlier, and it's so true. The longer that they wait, man, the harder it is to going to do it. There's no doubt, man.
This is going to end terribly. Don't this is. I mean, but if you're trading, you just. You know what I'm saying? You just gotta kind of go with it until.
Oh yeah, it doesn't matter. I mean, it's a number. In fact, this is. So check this out, folks. This is pretty cool. If you've been watching how these commodities go, what's happening in China right now is that the Chinese population has just jumped onto the commodity bandwagon, right? So there's all sorts of stories out here this morning about, hey, they just decided to go from equities into the commodities, and they don't even know, what they're doing. They're just buying, and they're buying rebar. Rebar just went through the roof, folks. Okay, it almost doubled in price. And I was reading this, John, right? And I was laughing. I'm saying to myself, who's ever writing those folks, it doesn't matter. All that matters is whether people buy or sell. It's like, oh, really? They could have wrote that about all us crazy Americans, okay, anytime in the last 80 years. Particularly, you know what I mean? It's just, hey, if people start buying it, guess what? It goes up,
Yeah, instead of being literally supply and demand in search of commodities for a certain purpose, it's thirst for commodities, and supply and demand kind of takes on a whole new connotation there, when people want to buy something,
Well, and then particularly in that environment, and this is so bullish for commodities too, folks. And in that environment, they love to basically gamble, man. That's the bottom line,
Well, I
think I'm half Chinese now.
That's funny. With a Boston accent.
Totally.
I'm over there a lot, as you know. I've kind of stayed in the States for a little stretch here.
Thank God. I'm glad you're here. Yeah.
I'm happy to be here. It's nice to be
here. It's a beautiful thing.
But yeah, it is I hate to kind of label it, but it can be more slanted towards gambling than not gambling. That's kind of culture over there.
There's nothing wrong with that. It's like, hey, give me a break, man. It's like saying there's not bars in South Boston when I was growing up. What are you kidding me? It is what it is, right? It's no big deal. Yeah.
Exactly. And when you go to China and it scared the mess out of me the first time I went there, because you go to Beijing, there's like 6 loops around that city, and they're all jam packed with cars. I mean, there are seas of people as far as you can see. When you go to Shanghai, and they've just basically bulldozed everything and started putting new buildings up as far as the earth turns over, like line of sight. New buildings. It looks like the Matrix when the machines took over and the buildings were up. So if that type of population gets the fever, so to speak, then it's game on.
Right. So no doubt about that.
So that's have you been looking at these grains? You've been keeping up with these at all? Because the dollar, you were pretty good on this dollar, and these grains are in the middle of some weather scares and everything else. We had John from Philadelphia this morning.
I was listening to it.
He's kind of detailed. It was very, very good conversation.
No doubt. Yeah, no doubt.
I don't think this is over. And like you said, the commodity kind of boom happening. I mean, beans literally could go to $15 easily, just to do it. If there's a demand, especially like a speculative demand.
And right now, folks, we're at 10. Okay, so you're talking about big numbers here. In fact, and whoa, my God, we're at 10, and we just come off 860, right?
Mm-hmm.
Yeah. And so today it did, I like the setup. So we did 209,000 contracts. Yeah, and you closed at a high, man. This is a closing high. So this could basically jump the creek tomorrow, man, which would be really wild, man. Meaning, blast right through this 1043.
Well, what the scanner's going to give you when it comes to trying to make sense of where do you try to enter these longs or shorts. We talked a lot this morning about blocking out the short side now.
Right.
Because, and that means you're supposed to buy breakouts or buy dips. And what the scanner will do, we've got commodities in there, futures, currencies, just a mountain of stocks globally. There's like 17 indices in here globally, and the internals of those indices. But when you look at beans, it's how do you get involved with them? We hit on the November contract. We hit that 984. Let's just pull this up.
Okay.
978. I'm looking at July in the scanner. I got the wrong contract up here, Tom. Hold on. Let me pull up July. Excuse me. So we had a pullback. See the top of that profile?
I do.
That's what the scanner really, I think, it pays for itself.
Yes.
I mean, when you're able to, God, beans are going straight up. I know we've crossed all these borders on the long term. I probably shouldn't try to. A lot of people try to short this. It's gone up too far, too quickly. That's where people get in trouble, because then those types of people have to cover, and then it's a feeding frenzy. But as you look at this July contract, these pressure points, this 984.5, these are inflection points that you can actually wait and let the market come to you. This is where you pick your battles.
Yeah, big time. You stay right there, folks. John and I are going to be coming right back. We're going to be talking to Taz Profile Scanner, and you can check it out, folks, right on our website, 30-day money-back guarantee. It's right on the front of the carousel. John and I are going to be coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. We're talking about our man, Mr. John Logan, who kicks us off every trading day, 8 o'clock in the morning, folks. You want to know what's going on in the markets before the market opens, 8 to 9. John has an outstanding show. Remember, right on your cell phone, just go to TFNN.com. On your browser, hit Tiger TV. You're going to get the audio, you're going to get the video, you're going to get all the above. Okay, so we're looking at I believe we're looking at the energy sector, right?
Of course.
And it's pure green. It's like St. Patrick's Day.
Yeah.
Extraordinaire, actually. My God.
I was looking at. The reason I'm referencing this, obviously, in the scanner. The first thing you want to do is when you're talking about the XLE, you're talking about crude oil. You want to just kind of get your bearings first on what's going on with the underlying and what's driving this move. And if you look at crude oil in general, you see the green across the board here in the cell structure.
Yeah.
And we also look at the long term, and we talked about this. We had to close last week. We came out and pretty much tested the neighborhood. This is a sea change event in crude oil, and you and I were talking about high 20s, low 30s. That's probably, there's some stakes being put in the ground. There's some basing action here.
Yes.
There were some things that were related to this product that were just starting to show, the Canadian dollar, a couple other things. And now that, we've got that basing action, and we now have kind of started trading above weekly long-term profiles for the first time since 100.
That's pretty intense. Okay.
Now you've got something to lean on there, and a lot of these stocks, and I'm just going to go back to the ETF, the XLE. A lot of these stocks you've had your eye on, namely Murphy and a couple other ones we have pointed out here really early. And the cool thing about the scanner is okay, we start seeing these things in oil. See the XLE kind of starting to look a little like it's doing in the Canadian dollar. We put all these things together, I think, in the morning pretty well.
Yep.
And when you try to increase the odds, so how do you do that on top of noticing these things? You drill down into the internals and try to find opportunities relative to that stance that you're basically finding out that you can take with that underlying product and all the other things. We just had some killer trades in this particular sector so
And when
far.
you see how easy the scanner is to use, folks, okay? So if you're watching Tiger TV right now, let me just, John has the scanner up, and I'm just going to put the same scanner up right on top of him, okay? But when you really have to see how easy this is. If you're at your home page, what you're going to see is you're going to see the scanner, the heat grid settings, everything else, right? Then you can go into the futures, okay? Then you can, that's all the futures lined up. Then you can say, okay, I know we got a lot of equity traders out there. Well, guess what? You just hit the ETFs. Everything's going to come up. You hit energy. In fact, John, hey, this is crazy, man. Look at those ETFs. All the ETFs are green, too.
Yeah, well, you've also got, we put something else in here. You also got a chance to look at the sector or the index itself in one glance too, along with these breadth calculations.
Yes,
right. A lot of people out there going, "Oh God, he's talking about this and that." And there's a pretty cool set of videos, I think.
It's a great set. Right on our website. Yep.
That we did to try to mitigate some of the confusion and try to point out how do you use these to try to, print some money.
Sure.
Month-to-month basis. So you also get the sector itself, the cell structure of the sector now kind of right there in your face. Also a chance to look at the sector in a chart. I hope you've got the latest version. Man,
I do.
Okay. All right. I'm gonna get on you if you don't. But if you come down here and you have these hunches and you try to increase the odds by buying the strong and selling the weak on those type of situations. And by the way, we never talk about this, but we've also got a little moniker over here, a little icon you can click on.
Right.
That for the guys out there who are like, wow, God, I don't know how to put these pieces together. It's not brain surgery once you learn how to kind of do this. But we've also got something over here that's kind of, gives you a dissertation based on scenarios that are happening and puts it out in a text format. So, for instance, on SWN, trend is favorable to longs, has been enforced for 9 weeks, blah blah blah, and it just kind of tells you the story.
No, hey, can you just read that long one? Because this is really cool, folks. If you're in your car, so you're going to see 3 different views. You got a long-term view, you get an intermediate-term view, and you get a short-term view.
They all say trend is favorable to longs.
Yeah, no, because they are. I know, but it's pretty cool that the breakdown that you actually have in these. So I just want people to understand just how detailed it is.
You know what else too, Tom, that was interesting that there was a prop group that we did some work for with our information up in Great Neck.
Yeah, Great Neck, New York. Okay, yep.
Yeah, man, really cool little town outside of right right outside of Manhattan, I guess. But they had some guys in there. They were great fundamental traders. I mean, they seem to get the great information. They seem to always get in the stock the right way for the long term, but their entries were horrendous. I mean, I'm talking, stock would be up 4 days in a row. They'd buy the high print. The thing would pull back, whatever, 10%. But they'd still be right overall.
Sure.
But just mechanically, technically speaking, we're just completely off base when it comes to trying to, enter the stock on support and just kind of get better fills, period. So what we did is we went in there and kind of taught the guys some technical analysis. We showed them how to use these type of, mousetraps that we have.
Yes.
And it just increased their returns incredibly. And I'm talking, these were guys trading like really serious amounts of money within sectors of this prop group. So, they got the Bloomberg terminal going. They're listening to this analyst and all that kind of stuff. And, when it boiled down to it, they actually entered the trade based on this technical information, which I
totally
think
makes sense. Yeah.
Anybody out there can get the same benefit.
Exactly. And you know what, folks? You're going to pay a lot less, actually.
Oh, my God. Yeah. I mean,
they talk dramatically so, right.
Yeah, they talk, I see these things, Betterment and all these other things on TV now. Most fund managers don't beat the S&Ps.
Right.
And they definitely don't mitigate the risk a lot of times. When the S&Ps go down, they usually lose more. So, having a tool like this, I hate to put on my salesman cap today, Tom, but it will save, for instance, like beans, do I buy this at above $10 as it's going straight up? No, you want to wait for a new profile, new inflection points to pick a battle. And it was to the tick on the July bean contract. I mean, and that, Apple, let's just pull up something, little known stock called Apple.
Yeah.
This thing gets its head bashed in, and here's the weekly. So we got a big inflection point to pay attention to. We talked about this morning. This is bad. This is technical damage 101.
Right.
And if you're going to play this stock, market's kind of compressing up. This is not cooperating. Absolutely. You probably shouldn't have been in this. I don't know if Kramer got everybody in this before. Who knows what happened there. But this unfair low, 99.80 and some change, 100. This is where now you want to let the market come to you for possible short opportunities on this.
Right.
And this scanner is going to just kind of hopefully make sense of the minefield of trying to trade some of these instruments. So again, you've got better longs out there, and if the market does turn around, this one's probably going to fall out of bed again.
Guy, listen, man. We all have cell phones. We all have smartphones. I mean, the bottom line, who else are they going to sell to? You stay right there, folks. John and I are going to be coming right back. And, of course, don't forget, you can come over to our website right now. 30-day money-back guarantee. Go check out the Taz profile, folks. You're going to love it. And, of course, 8 o'clock tomorrow morning, you can listen to John. Stay right there, folks. John and I are coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. We're talking about Mr. John Logan, who kicks us off every trading day at 8 o'clock in the morning. And you're going to get big action out here tomorrow, folks, because Facebook came out with numbers. Facebook closed at $108. It's trading $118. Now, as that was happening, Amazon's coming out with numbers tomorrow. Amazon closed at $606, while Amazon's trading up $10. It was down $10. It's trading up $10. So those are the ones that are up at this particular point. O'Reilly Automotive come out with numbers. That was at closed at 272. That's down to 264. It had been lower. So you talk about action. We get action in a big way out here, folks. There's going to be a lot more numbers that are coming out. John's going to go through all those markets for you in the morning. So the action's all over the place here, man. It's going to be pretty wild, man. John.
Let me.
That wasn't you. That was my producer, unfortunately.
Okay, you got me?
Yes, I do.
Okay. Yeah, another thing, too, a lot of times, we'll have a stance on something in the morning, and the XLF, the financials, they need a little bit of a widening yield curve under normal conditions, and this yield curve's not exactly been widening, and the rhetoric is not exactly conducive to that lately from the Fed. So, I wasn't exactly excited about buying financials, but the cool thing about the scanner, I'm going to repost this here. You still there?
Yeah, I can put the financials up. I got the scanner right up now. Okay.
I got a little snap chart from the scanner in here.
Okay,
but the
cool
thing about the scanner is, I'm not exactly excited about. I wasn't exactly excited about buying the financials relative to what I just said, but when we look at the profiles and we look at the structure here, this is the XLF, this is the cell structure, this is the breadth, this is the chart, this is the long term. At least it keeps me from doing something stupid like shorting them outside of the area where it was even possible to short it. So this is kind of climbed, and what it does for me more than anything else is it blocks out one side of the marketplace. So I know, even though I was wanting to kind of go short, it won't allow me to go short because, I'm an idiot if I go short, you know what I mean? Like above these profiles and the general rules that we use to do that. So,
sure. So what John's saying, folks, it comes into the profiles.
Yeah, make it more simple.
Well, no. The bottom line is that you haven't broken a profile. That's the you're going up inside the profile structure. So it would have to. Go ahead. I'm sorry. Go ahead.
No, I was going to say it allows you to understand when it's okay to be long and not okay to be short, or okay to be short and not okay to be long. And it's pretty simple. Just saying that, but it makes it relatively black and white. And when there's nothing to lean on and play defense against to allow yourself to kind of put on a risk-reward scenario, then you don't put it on. It's that simple. So, again, the first thing we talk about in the morning is the first thing I always talk about and I always think about for my own personal trading is how do I play defense first?
Right.
And if there's no way to play defense, then there ain't no way to play offense. So
the folks, what he has in here, so picture, he has world markets also. If you're in your car, they have world markets, and it's just a mind blower. I just hit the world markets up, and the bottom line is that there's so many that are green. The only two that are red are Malaysia and Shanghai right now. That's pretty intense, man.
Yeah, there's these S&Ps just if they take a run up, I think a lot of these will follow suit. And when you've talked about this thing kind of going up before it comes down, we're kind of just compressing up here, and it's kind of a scary situation to be short right now. But
unless you shot the NDX.
Correct. Yeah.
Hey, Len, you have a great one, a safe one. Look forward to the show tomorrow morning, 8 o'clock, John. Thank you, man.
We'll see you then.
Appreciate it. Okay. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great night, safe night. Right back here tomorrow morning.